Welcome to Car Wash M&A, the podcast, brought to you by Amplify Car Wash Advisors, the #1 advisors of car wash chains nationwide on mergers and acquisitions and capital advisory services.
Hi, I'm Lanese Barnett, Vice President of Business Development at Amplify Car Wash Advisors, and your host of Car Wash M&A, the podcast. Here, we'll take a deep dive into the current mergers and acquisitions activity of the car wash industry, with the goal of keeping car wash owners informed on where the market is today and where it's going tomorrow, so that you can make informed decisions about your business. We'll help you answer the question, should I sell my car wash now? Or should I enter growth mode and really scale my operation? Each month, I'll speak with industry experts who will share practical advice on how to sell or scale your car wash. While the industry is undoubtedly changing, what remains constant is the need for solid information so you can evaluate where you are and chart the course for the future of your business. Okay, welcome to episode 14 of Car Wash M&A, the podcast. Today, I have my colleague, Jeff Pavone, on, and we are going to talk about some really super timely topics that are going on, not just in the car wash industry, but in the market as a whole, but how it relates specifically to car wash owners and what they need to know. So, Jeff, since you need no introduction, I would love for you to just dive in and start sharing with us some of what you're seeing on the horizon. And now that we're a couple months into 2023, just what's your pulse on the market and the car wash industry?
Awesome. Hey, thank you, Lanese. Yeah, I think it's time maybe to sort of, set the record straight, because there's a lot of information coming out on where the market is, and there's a lot of, all kind of negative headwinds. And I got to tell you, what we're seeing on our side is we're still seeing lots of activity from buyers. We've both existing buyers who want to continue to add on to their existing platform, and there's still plenty of capital wants to come into the market. Now, with that said, I tell you, this is different than what it was the last few years that we saw. I think in years past, it was almost over the top exuberance of just it was a race to buy every deal.
Frenzied.
Yeah, it was a frenzy, and it was like, wow, we'll pretty much buy anything. Today, it is way more cautious buying, way more strategic. Nonetheless, still, we're seeing strong values being paid. I'd say that the bigger issue is there's just lack of quality inventory in the market.
I think that is such an interesting point, because it's not the lack of buyers, it's really the lack of inventory and the lack of sellers. And that's part of our message out here today, is that there's still the interest from lots of groups out there that want to explore the car wash space or expand.
Right. And I think when you look at the what inning are we in, or the opportunity to eventually have an exit, I can tell you, at least my opinion is, there's still white space out there. There's still a lot of groups out there looking to get scale. But I think as some of those white spaces get filled, that's the part where I think you'll start seeing less interest. But that may be. I think we've got another couple of years of good, solid of exits. So if somebody's looking to sell, it's still. I think there's still an opportunity to get a strong multiple and a good deal. But again, as some of these markets start to get a little more saturated than others, that's a time it's going to be a little harder to get a good price for your washes.
So what are the factors that help move that needle and help get the attractive multiples still? What is it that potential sellers could be thinking about that they need to really focus on today?
So, I would say, first off, it's the market. I mean, you got to be in an MSA in a market that buyers want to buy in. So that's certainly one. Two, lots of money still wants to get behind really solid operators. And I would say, if you're selling car washes, it's one value. If you're selling a car wash company or willing to stay in, it's another thing. And that car wash company would include an infrastructure and a team that can scale the business. Really still strong interest, really healthy multiples being paid for those kind of chains. So I would say if someone's really looking to get max value, first off, you got to remember the business that they're in. And I was with a group yesterday, and I kept asking what business you're in. It's just washing cars. And really the answer is you're in the membership business. And I can tell you, if you're really looking at driving value, just remember that, right? At the end of the day, the more members, the more of your revenue that's coming from memberships, which is reoccurring, far more attractive, far more valuable than just having car washes in general, because it's something you can count on. And especially Lanese, when you look at the weather pattern that we've been in, and this has been a funk for a while now, driving people crazy. I can tell you, having a healthy membership base is the only thing that's saving some of these guys. The guys without a healthy membership base, they're getting hammered. And, that just goes to the thesis of what business you're in. You're in the membership business if you really want to get max value.
Well, and that's something that has really emerged, on the forefront, especially in the last couple of years. For example, when you go to the trade shows and you see so many more technology companies that are looking to address these evolving needs of car wash owners who are focusing on the membership aspect of their business to help keep that stable revenue. And it keeps that track record and the performance history, even when you do have crazy things like outlier weather conditions that are becoming less and less outlier. But also, so those are, things that we know are going on, but we have other things that are popping up, like bank failures and other market conditions that are affecting what car wash operators can do.
Right. I mean, and I think certainly the capital markets have been of a big concern for everybody, right? I mean, so the guys buying this stuff, the guys driving the values of the private equity groups, their cost of capital is gone up significantly. And just as importantly, it's also gotten a lot tougher to get. So it's not as easy as before. Everybody was flooding the market with fresh capital. They had all the money they needed. Today, now it's more expensive, way harder to get. I'd say it's trickled down to some degree down to the owner operator level, where it's gotten more expensive. I mean, it wasn't long ago people were able to borrow in the 3% range, and now it's in the 6% range, maybe getting close to 7%. The regional banks have been still supplying good growth capital, but I got to tell you, they're going to get more conservative, and you can't predict. Right now it's still I would say available, but you just can't predict that what 6 months or a year is going to bring. I don't think we know the full impact of what some of these bank failures are going to mean on a regional level. And I would say, ask me in about 30 or 60 days, and we'll have a better handle on it. So, but the money's just no longer going to be, I think, easy or cheap. It's going to be really for the well-deserving operators. It's going to be more conservative underwriting, and it's going to be more expensive. Now, it's still affordable in all senses, but it's just not going to be nearly as easy. And I can't tell you what 6 months or a year predicts will bring the market. But I can only tell you, it doesn't feel like it's going to be getting easier. I think it's going to get a little tougher going forward for everybody in this business.
I imagine I know the answer to this, but I'll ask anyways. What is it that car wash owners and operators can do today without knowing what the future holds to help position them better?
So, I'd say, a couple of things. We've been, as a firm, advocates of operations, right? We've been just pushing people to learn how to operate better. At the end of the day, the greatest way to pick up the value you're going to lose on, let's say, on a multiple, let's say instead of, call it 15 and it's 12 or something now, or 11, you can still pick it up if you can operate. So I would say invest in your company, get to know your customers better, invest in marketing, driving more members. And so that return on investment is probably the best investment you can make. The other thing is going to be nobody's buying, I would say, C or even B sites. So if you're gonna move forward on a development project, just make sure it's an A+ site, or don't do it, because there's the line is going to be very short for those opportunities. But yet there's still a great opportunity for great sites. So my advice would be you got to be hyper focused on quality, on locations, and in quality and operations. that'll go a long way. The other discussions that we're having, if somebody's looking at doing something, again, if you're in a market where you've got a lot of private equity backed chains that are going to continue to grow, the last thing you want to do is be squeezed out where you can't afford to grow against them because you just don't have the capital or want to take that risk on. You really, at that point, need to decide where do you want to be in the next couple of years? Because if these chains that are now hyper focused on growing down their multiple by building more greenfield, and you're in one of those markets, at some point your value could start really getting impacted because you're just become an add-on deal for somebody. Right now, there's still a great opportunity if they're looking for an exit or even looking for a financial partner. I'd say look at it now, but if you think about it in 2 years from now, if you're in a market with really strong competitors and they continue to grow, you may be a little bit disadvantaged or boxed in, and your value is going to be impacted by it.
It sounds like what you're saying makes long-term sense anyways. Run a strong, operationally focused business that's scalable, that's sustainable. If you're treating your customers and you're serving your customers well, then you're already setting yourself up for success to have continued loyalty. But I think if you're taking your eye off the ball or not investing in the team and investing in the marketing and in those memberships, that you do have a more likely chance of being negatively affected by new entrants coming in the market that can outposition you in all of those things.
That's right. And I think, the independent owner operator still has the advantage, right? I mean, they're hyper focused on their customers if they're doing a good job. Customers like going to local owned businesses. And I think the larger chains are doing a little more cost cutting just because it's the environment we're in, and that goes across everything they're doing. And so you can still win with customer experience in that sense. I agree with you totally. I think at the end of the day, the owner operator's got to stay they've got to make sure they're just doing the best job, better job than anybody else. And it's hard to take away those customers once they become a member. So it goes back to, again, what business we're in the membership business. And as long as you continue to take care of that member, it's really hard for somebody to take them away.
In the last episode I had with the team over at AMP, one of the things that they talked about was brand loyalty over convenience loyalty. And that's something that they look to help owner operators best position their customers and having those relationships with their customers that's beyond it's convenient and close to my house, but it's because this is their brand and they have that tie to it. And I think that that's, very similar to what we're talking about, that when you have that loyalty to a brand, that you're now having a relationship with them instead of just a tick mark on your way home that you stop, that it's a two-way street to have that relationship aspect of it.
Yeah, and I agree for the most part. I mean, I think at the end of the day, if you look at some of the oil companies, they've done a great job at building brand loyalty, right? They build really just an amazing, they were in the gas business, but then they got into the loyalty business and really expanded the customer experience and with their new footprints of stores and that. And car wash operators, I still think it's going to be convenience, right? At the end of the day, I'm not going 10 minutes further to get a car wash unless the one near me is that bad. So I do think convenience is still going to be number one, but I do think overall, if you can build convenience along with a very strong brand, that's the holy grail and hard to beat.
You're both.
Yeah.
So you brought up the gas stations. Let's talk just a little bit about some of the new entrants into the car wash industry that we're seeing. Just kind of, we had the True Blue that was bought by or acquired by Couche-Tard. From our standpoint, we're seeing more and more interest from different companies that are either revisiting or visiting the car wash industry as something that they want to be more active in.
Sure. And I would say this year I've had more calls from gas owners, from large national brands to even large regional brands that are all wanting a piece of the action. And they feel that it's just one more product they can offer their customers, and they've got an advantage because they feel they can tie it in, and the brand loyalty thing is going a big way, right? They can bundle in car washing with something else at the pump. It becomes far more valuable, and I think where the winds are changing is it doesn't necessarily have to be on site, on property. So even if the car wash was within maybe 2-3 miles from where their gas station was, they can still feel a way to tie it in. And I think we're just seeing them dip their toe in the water kind of thing and experiment it. But the bottom line is they've got a lot of money. They're very strong real estate companies. They're very strong loyalty companies. They've got a lot of cash from the last few years. So I would say certainly, right now they're behind from where some of the great operators are at. But there's somebody to look at because they're also long-term invested money. So they're not looking to be in the short term. So they can come in this market and really play the long game where they will invest over time without having any need for an exit, which makes their business strategy a little different than the current group that's in the space.
And that goes back to our starting conversation about why now is still potentially a attractive time for sellers to consider who their buyers are, their potential buyers are, and it may be more than they think, despite all of these other negative headwinds that we face as well, just in general or within the car wash industry. But there's still a lot of opportunity out there with these groups coming into the industry as well.
Sure. Yeah. We've seen a major shakeup right in the last 5 years, call it, with private equity really realizing the opportunity in the space. And now I look at it and I say, so look at this thing maybe in the next 5 years. What does the world look like? And I just think that it keeps shrinking as far as I think of what it's going to look like. I think, great operators and well-established family chains that want to stay the course for the next 20 years could still make it, again, back to your brand loyalty, because they have brand loyalty, but they're typically the companies that are investing heavily every day and adding locations where their market's growing. They're constantly improving their product with keeping up. And so, I think they can continue on that course for a long time. It's sort of the guys that are in between. I'd say the guys that are in between that are still growing their platforms with lots of greenfield development. There's guys in between. I think those chains like that, they're at a point where they're going to have to make a decision whether to continue to do that or bring in a financial partner to sort of de-risk some of this growth. And we're having lots of conversations with folks because, right now they're feeling the pressure of, when I got to build something that's $6 million or $7 million today, and my interest is going to be 6-7%. That's a big difference in the amount of risk that you're taking on versus before. And as credit gets a little tighter, it's going to be harder to continue to grow like that. So I think at this point, the good news is because there's still lots of interest, I think there's still opportunities for buyers to bring on a good partner if that's the way they want to go, or if they want to sell. I think there's still great values being done. But Lanese, one of the other really important factors is just knowing who you're doing business with. And so, before sellers and owners would get phone calls from 100 groups out there. And for the most part, I would say most of the deals, if they entered into an LOI, would close.
Right.
That's not the case today. Today, having the understanding of, I don't care what group it is, how big they are, how big you think they are, there are a lot of big groups out there that have credit challenges that may or may not be able to close a deal. And so I would say rely heavily on your advisors and people that have more intimate knowledge about what goes on behind the scenes of some of these chains. But we have definitely seen some challenges along the way of folks not getting their deals across the finish line. But I think some of it is just they've got to know who they're partnering with today, because it's not what it used to be just a year ago.
Right. And that's for some car wash owners that look at, maybe selling direct. It's a lot of eggs in one basket to one group that on a deal that may not close. And so the advantage of having those trusted advisors to help best position to multiple people or know what's going on broadly in the space can really be key into not wasting your time.
Lanese, the most probably important thing I can tell anybody today is most of the traditional buyers have restraints, and they're going to give you a fair value of what your car washer chain is worth, because at this point they've got a pretty good idea of how to make those numbers work. I would say there's some new entry points in well-capitalized private equity groups and other financial buyers that would step in and pay more, but you've got to open up your horizon of what that world of new buyers looks like. And that's where I think today's owner-operator may be at a little bit disadvantaged. It's not like before where you can count on getting the best dollar from some of the top, one of the top 10 guys out there buying. It really is taking a lot more work to get to know who the complete buying network is. And there are really a lot of new players that are not in the space today.
And that work that you're talking about for the owner is, making sure that their books and records are organized and that they've got all of their ducks in a row so that when they do have an opportunity to present that they have all of the materials and everything organized, that the due diligence side of it is much stronger as people are taking a more conservative approach to spending their money on the buy side, right?
Yeah, correct. And we have a really good idea of what buyers are looking for and what buyers look for when you're looking to pay a premium, right? So everybody wants to get max value. And there's sort of a playbook today. And so it's how you tell the story. And it's everything from a site level to a company level to a market strategy. And all these points would really increase your odds of getting a much bigger valuation. But it's not as easy before as just saying, here you go, here's what I've got, and let somebody just bid on it. I know us as a firm, we put a lot more effort in what we used to do at building out that story. But at least we're starting to see some really good results.
Yeah, and I think that one thing that's really encouraging and should be a point of hope for the operator too on this side of kind of the iteration that buyers are looking for, and that narrative of telling the story, is that it doesn't always have to check a specific box to still be of value to a buyer on what the opportunity is and what the some of the intangibles are that are maybe down the road, or the strength of their team, or whatever it may be. But there's more of a opportunity to showcase that when you have that experienced team that knows how to tell that story.
For sure. I mean, again, we're in the middle of working on another, I would say 10 plus store transaction. And as we meet with the owners, we've been working at this for a year, really helping them to look at what do you need to do on a site level? What do you need to do on a corporate level? And really helping them fill in check all the boxes that they need to do today to go and really then go out and really try to get a fair value. Before it was just a bunch of assets. And really, it's kind of putting the pieces together, tell the story to have a scalable car wash company. Takes a lot more effort and work, but at the end of the day, the reward is significant upside for the owners.
Right. Absolutely. And I mean, at the end of the day, and we've talked about this before, but the consumer is also the one that's winning here too, is by having more quality car washes that are available to them. It's raising the level of the car wash industry and what customers now expect from car washes in general. And so that's exciting, and that's a win-win on both sides.
For sure. I mean, at the end of the day, I think the consumer is the biggest winner, right? They have a lot more options out there. As car washes, the old rule was stay 5 miles away, 3 miles and 5 miles and whatever they can. And now you're having car washes, a mile away and much closer. And so consumers for sure have a lot more options. And I think in the future, they're going to have a lot more options as we double the amount of car washes that come out. That's good news for the consumer. That means for the operators, if somebody's got a wash and they're letting, maintenance go down or trying to short on chemistry and other things, they're going to be greatly impacted, and eventually they're not going to have anywhere to go but down. That's why. And the other, Lanese, one really important thing is we're starting to see some really new technologies. At the end of the day, what business are we in? I said we're in the membership business, right? The data part of that membership becomes incredibly valuable. The more we as a industry learn about our customers, that data becomes really important, especially, again, when you look at the big buyers out there, they make a living at really data and analyzing data and what they can do with it. And so with car washes, it seems like an old school business, but as we grow our membership base, you're going to have a lot more data. That data becomes incredibly valuable. And so some of the new technologies that are coming out in the market are absolutely invaluable to knowing, the more you know about your customers, the better business you can manage.
Absolutely. And with those options for car wash owners, it doesn't mean that they have to have their own data analysts on their staff, for the smaller groups, that there are more plug and play options that are within reach to them that they can use and stay competitive amongst these other larger groups that may come into their market. And that's really exciting, I think, for the individual owner or the smaller owner that it's not out of reach now.
Yeah, I would say there's a lot of innovation going on today, and even on an operator level, there's a lot of change that have started creating some of their own technologies, back office and dashboards and all kinds of cool stuff. The problem is it's expensive, really expensive to develop, even more expensive to maintain long term and to stay cutting edge. When there's some really, I think you're going to see, over the next couple of years, some really high quality technology and companies emerge. That's a plug and play. That'll be white label. You can, for your own car wash chain, that I think could keep you cutting edge without you sort of, killing yourself trying to develop your own systems.
Yeah, totally. I love you reading my mind that I think what's so neat from a branding standpoint on my side is that white labeled aspect of it, that the customer still feels like they're talking directly to your brand. And it's an extension of. But I think that's really a neat part of it that's exciting for car wash owners.
Right. I mean, we've evolved, like even, as we're preaching to our car wash operators and chains to evolve, and because this is big business now, right? It's no longer mom and pop. We've added a bunch of resources on our team, and I would say the majority of that expansion has gone to operations and technology, because we just believe the real value is going to be on a site level. Each unit, if you can drive more volume, understand our customers better, we're going to create a more valuable business. And so as a firm, it's just really expanded out how we approach it. And again, before, it was easy, right? We go out, take a deal out to market, and we had a feeding frenzy. But today it's a different world. We've got to basically help, bake that story and really get operators understanding everything that the outside world's going to be looking for that value, and helping bring some of those pieces to them so they can max value. And
not to sound, tooting our own horn here, but that is one of the reasons why I think you're so smart, you and Bill Martin, to assemble people who are already connected to the car wash industry very specifically, because beyond just sending something out, 2 years ago when there was much more, the pace was so much faster, but now that it's a little bit slower and it takes more work in telling those stories and understanding how people can strengthen their operations, that we have the expertise and the experience to help people do that. And I think that that's super important to have that to lean on.
Well, again, as we get more data, if you're smart, and you're going to be learning from the data, and the data is telling us, that there's still a lot more opportunity in the space on a site level. We're still seeing sites outperform. You can have two operators in the same market, and one site is outperforming by double or triple because of a better operator.
Right.
And so for us, it's like, it's easy to tell somebody to go build 10 more car washes, but I do think it's probably just as important or more important to show somebody on what resources they have and what they need to do to grow their own business on a site level, and building out their corporate level where they can scale a company. Far more valuable, but it does take experience and resources to kind of help on that.
It does, and it takes the willingness and the motivation and the want to put that work in, because it doesn't just happen overnight, as we know.
That's right. And there's ways to sort of learn it. Again, we've got a lot of operators been doing this for 50 years. So they've learned it over the long haul. And in today's world, I mean, everything's moving so fast. And because of I would say, much more higher risk environment we're in, right? Because of cost and everything else. For us, we're just trying to help shorten that learning curve for a lot of people, because, at this point, there's a lot of good playbooks out there. So anything you can do to shorten the learning curve, probably better off.
Yeah, totally. I love the Cliff Notes version with still the A+ at the end. Well, Jeff, thank you for sharing your thoughts on where we are today and just kind of some outlooks over the next 6 months, the next couple of years, and where the car wash runway still lies ahead. You shared in the beginning that, your overall thesis for the car wash industry is still favorable. So that's great news. We'll take it. Anything that you want to leave our listeners with before we sign off until next month?
No, I would say just I would start expanding your horizons on looking at all the tools and technologies that are out there now that can help you manage and grow your business better because they're out there and there's more to come. And again, remember the business you're in. I think if you're looking at it the way of maximizing value, think memberships.
I like it. All right. Well, we have the car wash show through the International Car Wash Association coming up in Las Vegas in early May. So we will have a booth there if anybody wants to come by and say hello. Our booth is number 811. We'd love to see you. And thank you for listening.
Thank you.
Thank you for joining us on this episode of Car Wash M&A, the podcast, with your host, Lanese Barnett. Like what you hear? Subscribe to our podcast feed and leave us a review or follow us on social media at Amplify Car Wash Advisors. Want more M&A information? Visit our website at amplifywash.com and listen for new episodes on the last Thursday of each month.